How to trade with the zigzag indicator. The zigzag swing trading strategy presented requires the use of one particular indicator. The Fibonacci extension indicator will be used to additionally confirm the ABCD pattern. It will be used for trade management as well. Now, before we go any further, we always recommend taking a piece of paper and a pen. Note down the rules of this entry method. For this video, we're going to look at the buy side. Step number 1. Set the zigzag indicator settings at 20 for the depth and 5% deviation. First, we want to make sure the zigzag tool will only show the more significant swing high and swing low points in the market. For this, we have to use at least 20 periods for the depth and 5% deviation to accurately display the market swings. Now we're all set to conquer the market swing waves. Step number 2. Plot the Fibonacci extension line once the first two swing waves are established. In order to plot the Fibonacci extension line, we need 3 points of reference. As soon as the first two waves of the zigzag pattern are developed, we're offered 3 swing levels. We're going to use them to draw the Fibonacci extension levels. The reason why we use the Fib extension levels is to try to anticipate where the last swing wave of the zigzag pattern will form. The zigzag indicator will only mark the swing low as being formed too late for us to rely and base our trades alone on this indicator. This is the main reason we employ different trade tactics. The tactics are used to anticipate where it's more likely for the zigzag pattern to end. Step number 3. Wait for the third wave to terminate between 0.618 to 0.786, or between 1.0 to 1.272. The reality is that market symmetry doesn't happen often. The AB equals CD pattern requires a lot of precision in order to have all the conditions for this pattern to be valid. Throughout our backtesting software, we have found out that the third wave of the zigzag pattern ends between 0.618 to 0.786, or 1.0 to 1.272. Since we can't know for sure where the third wave will end, we're going to employ one of our favorite trade techniques to spot a swing point in the market. Step number 4. Wait until you have a candle with a higher low on the right and the left. The bar from the right needs to break above the bar on the left. The 3-bar pattern to spot a market swing point is quite easy. All you need to do is to wait until you have a candle that has a higher low on both the left and the right side of it. In order for this 3-bar pattern to be confirmed, we also need the bar from the right to break above the high of the bar from the left. To better understand how to spot when a swing low is about to be put in place, we've made a simple illustration. See figure. Now you need for this pattern to develop between 0.618 to 0.786, or between 1.0 to 1.272. The zigzag strategy satisfies all the trading conditions, which means that we can move forward and outline. Step number 5. Zigzag trading strategy. Buy at the close of the 3-bar pattern. After the 3-bar pattern is completed, we don't want to lose any more time, and we go buy at the market. Note we use the 3-bar pattern to anticipate swing market points with all of our trading strategies. This brings us to the next important thing that we need to establish for the best zigzag strategy, which is where to place our protective stop loss. Step number 6. Hide your protective stop loss below the 3-bar pattern. The stop loss is going to go below the 3-bar pattern. Your stop loss may be a little bit bigger depending on the time frame you're trading. You want to make sure that the 3-bar pattern, where your stop loss goes, maintains at least a 2% risk. You don't want to risk more than 2% of your account in any given trade. Last but not least, we also need to define where we take profits. Step number 7. Take profit equal 2 or 3 times more than the stop loss. Now, where's our profit target going? The classical ABCD pattern essentially keeps you at a 1-to-1 risk-reward ratio. Also, a lot of the time with the ABCD pattern, you'll see it pretty frequently that those targets areas are front-runned. However, when you trade with the zigzag indicator, you're able to capture 2 or even 3 times more the risk taken. Note, the above was an example of a buy trade using our zigzag trading system. Use the same rules for a sell trade, but in reverse. In the figure, you can see an actual sell trade example. Conclusion. We hope you enjoyed this step-by-step guide on how to use the zigzag indicator to time your entry and identify the market swing points. The idea behind this simple strategy is to have a better assessment of the trend, so you can make better trading decisions. You can also watch our winning news trading strategy. With the zigzag trading strategy, you'll be able to hold on to your winning trades, and you'll avoid the urge to liquidate your position on any minor pullbacks, which are ordinary in the market. Thank you for watching. Please leave a comment below if you have any questions about how to trade with zigzag indicator. Also, please give this strategy a 1 like if you enjoyed it.